So it depends on what kind of sanctions. We distinguish in the work between two types of sanctions, debt and asset sanctions. So debt sanctions affect the ability of the banks to issue debt in foreign currency to foreign investors. And asset sanctions affect both sides of the balance sheet of the bank, specifically also affects the holdings of assets in foreign countries. And so when the debt sanctions are hitting, then actually the banks that are not yet sanctioned, but may be sanctioned in the future because either they are state owned or controlled or private banks with political connections, they're going to start issuing more debt. So to some extent they're not afraid of these type of sanctions. They want to get through the door quickly. They want to take the advantage of the willingness of foreign investors to still buy these debt securities. In contrast, asset sanctions, as we call them, which are also affecting the holdings by banks abroad, there we see a contraction also for banks that are not yet affected by the sanction, as of the first sanction announcement, and a bit of an overreaction. So in the sense that then later on they're going to try to readdress or reset their balance sheet accordingly. But so they overreact in terms of selling off or no longer buying these foreign assets. So there's a clear distinction between the two. And the reason is, of course, that a debt sanction is most detrimental for those that actually hold the securities, in the sense the foreign investors are now holding Russian debt that, if it's sanctioned and if further measures would be taken, could become less worth for them. So clearly, to the extent that this is an objective, I think it's a bit unrealistic to expect that financial sanctions on banks in an economy like Russia will not have consequences for people and firms. So to the extent that there were less consequences, this was the result of actions by the Russian government. So I think one needs to take into consideration that financial sanctions are going to have effects. If one wants to minimize, say, the effects on the poor and population, one can target maybe less those banks that would service these kind of people. But I think it's all a bit unrealistic to not have any effects on the local population as well, which is a bit unfortunate, but clearly, but that's the case for many other sanctions as well. Yes, so clearly these politically connected banks are going to anticipate that they may be affected by sanctions. This is sort of part of the modeling that we do. And then we see them respond accordingly. So those banks, even though they're private and looking exposed, were never really in the bullseye of the sanctioneers, are going to anticipate nevertheless and are going to start making balance sheet adjustments, which in the case of debt sanctions initially means that they're actually going to issue more debt. In the case of asset sanctions, they're going to start shrinking their balance sheet accordingly. And this depends on the intensity of the political connections. So the more intense the political connections, the more elaborate or the more intense these type of balance sheet adjustments are going to be. So this is also clearly going to change somewhat their position into the Russian banking system. So to this extent, the less politically connected banks, they're going to be not having these type of balance sheet adjustments, which in the case of asset sanctions is going to lead these banks to remain somewhat larger compared to their politically connected. So to this extent, these sanctions did affect more those banks that were, at least in anticipation, the banks themselves imposed this on them because they feared that they were going to be hit, balance sheet shrinkage. So one could argue that to this extent the sanctions hit because clearly I think the arguments often made are, of course, that one wants to hit the system as much as possible as it is connected to the center where the decision for the war were taken. So it's not impossible that some of the technological developments, crypto and the like, make financial sanctions to enforce much more difficult, right? Much more difficult to enforce sanctions because some of these crypto currencies are very difficult for policymakers and enforcement mechanisms to assess. And so there's anecdotes and reporting on leakage of sanctions now as a consequence of the Ukraine invasion through crypto markets. And so to this extent, clearly also crypto is one thing, but there's also some of the other newer financial entities, multiplication of fintech, smaller financial agents may actually then play play a role where enforcement is much more difficult. So it's not purely crypto, but also other type of financial entities that were not maybe there before are somewhat outside of the stricter regulatory parameter that then are going to play a role in undercutting the sanctions.